Prices have declined a bit over the past year, and that has some people wondering if the U.S. housing market is going to crash in 2026. While no one can make such predictions with complete accuracy, there are three reasons why a housing market crash in 2026 is unlikely. Let's start with number one. Home prices have already self corrected. What I mean by that is, when home prices skyrocketed during the pandemic, as you can see in the middle of this chart, they peaked during the summer months of 2022, and then they declined a little bit. In some real estate markets, they're still declining. Places like Austin, Texas still have falling home prices because they skyrocketed even more during COVID. But for most of the country, what we call a market correction, when prices kind of reset and decline after a sudden surge, that has already happened. You can see that in this chart where we peak at 2022, decline a bit, and then gradually rise. The most likely scenario right now is that home prices in most U.S. cities will remain flat or slightly increase over the next year or so, but a significant downturn in home prices is unlikely for most cities across the U.S. Some parts of Florida and other markets that are really cool right now could see steady price declines going forward, but for most of the U.S., that scenario is unlikely. Let's move on to reason number two, why the housing market crash is unlikely in 2026. And it has to do with supply. All right, this chart here shows months of supply. That's just a metric we use to track supply levels within the housing market. This goes back to 2012, and it's based on data provided by Redfin. What you can see here is that supply plummeted during COVID when everybody started moving because of the rise of remote work. That soaked up all the homes that were for sale, and we had a supply shortage. Since then, supply has increased, as you can see on the right side of the chart, but it's really only touching pre-pandemic levels. As you go back to 2015, 2016, we had more supply in the housing market than we do now. The short version, we are still experiencing a housing market shortage. This quote on the right side stresses that same fact. So we don't have an excess or a surplus or a glut of supply, and that's one of the things that contributes to a housing market crash. So that's another reason why it's unlikely. Reason number three, we are not experiencing any kind of significant economic shock or disruption currently as of fall 2025. You think back to previous recessions, they're usually tied to some kind of major event or disruption that kind of kicks it off and starts the dominoes falling down. 2008 recession, if you probably remember, was kicked off by subprime mortgage collapse when a lot of people with risky mortgage loans, like ARM loans, they were suddenly resetting to higher rates. People couldn't afford their payments. We had a massive surge in foreclosures and subprime mortgage crash that just led to a broader housing market crash and an economic recession. In 2020, more recently, of course, we had the COVID pandemic that put a lot of people out of work. It created a recession. And surprisingly, in 2020, the housing market surged. So that's not the best example. But the point is, most housing market crashes, when we talk about a steep and sudden drop in prices and for rise in foreclosures, all of those ingredients that make up a housing market crash, they're usually connected to some kind of economic shock, and we don't really have that right now. We have a kind of an okay economy in the U.S. I mean, you can read this quote by the Federal Reserve governor. We have problems. Inflation is a little higher than where we would like it, but overall the economy is strong. We don't expect any kind of major disruption. Of course, no one has a crystal ball, so that doesn't mean that won't occur. It just means that it's unlikely at this stage. So that's three reasons why a housing market crash in 2026 is unlikely. If you like this report and you want to receive more detailed reports in your inbox every week, including exclusive analysis from yours truly, sign up for Housing Weekly. That's my weekly newsletter. You can sign up. There's a link in the description for this video. You can just Google Housing Weekly and find it. You can go to homebuyinginstitute.com, which is the main site for this newsletter, and you'll always know what's going on with the real estate market. I keep my readers very well informed with unbiased, objective, fact-based reporting that helps them make informed decisions. So if you're interested in this subject, you have a vested interest in the housing market, maybe you're a real estate professional or a future home buyer, sign up for Housing Weekly and you will always know where we stand. Thanks for watching. Have a great day.